Good morning and welcome to Morning Markets on the 31st of August. Today we'll look at some data from the US that builds on Paul's comments from yesterday and also focus in on inflation data from Europe. Following on from Paul's comments yesterday that we were seeing tentative signs that the US economy was starting to slow, we had further data yesterday which backs up that initial assertion. Firstly, we saw second quarter GDP being revised slightly lower from the growth rate of 2.4% to 2.1%. We also heard from ADP looking at job hiring within the private sector and further evidence there of a slight slowing in the rate of hiring coming through. Again, this is all just evidence that significant interest rate increases that we've seen over the last 18 months are starting to have an impact into the real economy. So something that we'll certainly continue to focus on. Also yesterday, worth commenting on the inflation data from both Germany and Spain, which really bring to life the challenge that the ECB is going to face at their meeting in September. There had been some expectation that coming off their last meeting, as President Lagarde discussed, that we would see a potential pause from the ECB in September. That looks slightly more challenging just at this point in time, given the relatively stubborn levels of inflation that we're seeing in Germany, but also in Spain. So we'll watch a number of other data points today on Eurozone inflation to see if that picture changes. But certainly that is presenting an interesting conundrum for the ECB in September. Also today from Asia, I wanted to focus in on just a story from China. Again, the challenge that we've seen there in the property sector. Country Garden, one of the largest developers, really talking about the challenges and reporting a loss of some $6.7 billion for the first half of this year. We also had purchasing manager data which indicated ongoing weakness in the manufacturing side in China. Services remains in expansion territory, but it has to be said that the rate of change there is certainly more to the downside than the upside at this point in time. That all comes together. We've had a number of small and incremental policy announcements from the People's Bank of China and the Chinese government to support the economy. I would suggest at this point that the market is probably focusing in on something of a more material nature is required to effectively kickstart the Chinese economy at this point in time. I'll leave it there for today, but please do join us again tomorrow. Many thanks.